Hi guys, and welcome to another week ahead video. Now in this week's video, we're going to be focusing on the Australian dollar, more specifically on the employment report coming out for Australia in the upcoming week. Now, the reason why we think this can be a very interesting report is given the recent data sets that we've received out of Australia. We've also had the RBA coming out a while now saying that they are noticing a gentle turning point in the Australian economy. Now, as such, the data points that we've received in terms of growth, in terms of consumption, hasn't really corroborated that view as yet. And we think that this jobs report can be very interesting, especially given where the markets are currently pricing in expectations for interest rates for Australia in the year ahead. So looking at this week, as we said, we're going to be focusing on that jobs report coming out this week. So let's jump into the video now and see exactly how we can prepare and possibly trade this event in the upcoming week.
Okay, so then starting with the baseline for the Aussie dollar, currently we maintain a bearish bias on the currency. Now we have the RBA that came out last week and a couple of weeks back as well, saying that they've seen a gentle turning point in the Australian economy. But the recent data doesn't really support that view at this stage. We also had the RBA coming out saying that the main domestic uncertainty at this stage continues to be the outlook for consumption. Now, if consumption is their biggest concern, then they really do have something to worry about. If we look at the recent data, we had the previous release for quarterly 3 GDP that came in at 0.4% and the year-over-year number that printed at 1.7%. Now, at this stage, the annual growth is way below its 2.75% trend, and the quarterly drop in final consumption from 1% to 0.3% is also really concerning. Now, this drop in final consumption is really important because it shows that the current income growth and household debt levels are really starting to weigh on the consumers and their finances. Now, it's also worth noting that the latest PMI numbers for manufacturing services and the composite number all dropped into contractionary territory. And we also had retail sales that came in well below trend and its lowest levels since 2017. Now, the recent sentiment and confidence indicators were also disappointing, with consumer sentiment falling 1.9%. Interestingly, Westpac Investment Bank also noted that perceptions about the economic conditions were at their weakest in 4 years and that employment conditions were assessed as overall negative. Now, thus, if the recent data is anything to go by, the data has not really been supporting that RBA view of a gentle turning point in the economy. So far, the data points to a struggling consumer, which does not really bode well for the RBA's optimistic growth forecast of 2020 of 2.8%. Now, as always, we have also seen the Aussie dollar being at the mercy of the ebbs and flows from the risk sentiment with the ongoing trade negotiations between the US and China. Now, on Friday, it was announced that an agreement for a phase 1 deal has been reached. However, with some of the details a little bit contradictory, the commodity currencies like the Aussie and the Kiwi had a little bit of a whipsaw move, which resulted in an overall lower move despite the supposed breakthrough. Now, further details on the next stages and developments will continue to be a short-term driver for the Aussie dollar as well. Then looking at the baseline for this week's risk events now, what we're going to be focusing on this week will be the upcoming Aussie November's jobs report. Now, deviations in Aussie employment data has seen increasingly bigger reactions in the currency lately, especially given the RBA's current focus on the consumer, which is obviously very important when that is related back to jobs. Now, the previous jobs report came in worse than expected, with headline employment suffering its sharpest fall in 3 years in November, coming in at negative 19,000 versus expectations of a gain of 15,000. Now, the more important full-time employment also showed a contraction of 10,000 from a prior September reading of 24,000, almost 25,000. Now, the unemployment rate also nudged up to 5.3%, which basically reversed a promising dip that we saw in September. Now, this week's report will be an important release as it could increase expectations of further easing from the RBA. Now, the November jobs report is expected to show an increase of 14,000 and the unemployment rate is expected to remain unchanged at 5.3. Now, Westpac notes that the recent business surveys and unemployment expectations do suggest continued weakness in the labor market and does pose a downside risk to this upcoming jobs report. Now, looking at some possible sentiment shifts and starting with dovish sentiment shifts, Currently, it's interesting to note that the markets are pricing in only a 3% probability for a February 2020 rate cut by the RBA. If we purely just look at the recent data, we think that 3% is a little bit too low and would argue that the risks are still tilted to the downside for the Aussie economy. Another miss across the board in the employment report this upcoming week would offer an opportunity for us to sell the Aussie dollar in the short term, as it would likely be enough to increase the market's expectations for that possible easing by the RBA in their February meeting of 2020. Now, the highest conviction opportunity would result from a miss below the market's minimum expectation of 0 for the headline employment and another contraction in full-time employment as well. Now, a further increase in the unemployment rate would also add to that dovish bias in the short term as well. Looking at some possible sentiment shifts from a hawkish side, the markets took the RBA's most recent rhetoric at their meeting to be a little bit more upbeat than expected. Now, in the upcoming week, we also do have the monetary policy meeting minutes. Now, that might reiterate some of those more positive nuances mentioned by the RBA and could give the Aussie a little bit of lift at the start of the week, so do watch out for that. Now, with the market only pricing in a 3% chance of a February rate cut, a really big beat in employment might push the bank rate cut expectations out even further than we have seen already. Now, with supposed progress on the trade front, a more upbeat view on the monetary policy outlook could create a good opportunity and environment for the Aussie dollar to move higher in both the short and the medium term. So that is really something to look out for. And watching how the release changes those further policy expectations will really be a key in this upcoming week. Okay, so how can we look to trade the Aussie in terms of a dovish or a hawkish sentiment shift? Now, in the case of a dovish sentiment shift, we could look to pair the Aussie against the Kiwi, which has remained well supported after the RBNZ opted to leave rates unchanged at their prior meeting and opt for a wait-and-see stance towards monetary policy. Now, we do also have quarterly GDP numbers coming up for New Zealand in this upcoming week. So if we do see a beat in the GDP numbers for New Zealand followed by a miss in the Aussie jobs data, that could really see a further continuation of that Aussie Kiwi dollar recent downtrend that we've seen developing. Then in the case of a hawkish sentiment shift, we could look to pair the Aussie against the euro, which does remain fundamentally bearish due to the current economic slowdown in the European Union, as well as the softer monetary policy stance with the introduction of the ECB's latest stimulus package. Now, this event, whether we have a hawkish or a dovish sentiment shift, is valid for trading phase 1 trades if we do get a clear sentiment shift. Now, if you're interested to learn how these phase 1 trades work, you can check out our new trading strategy playlist on our YouTube channel, where we post weekly examples of how these type of events play out. Now, if we do get a phase 1 move generated by a sentiment shift, then we can also look for a phase 2 pullback of that initial move. And we post updates on these moves inside our tradable sentiment shifts report inside the Forex Source terminal under the Market Insights tab. Now, you can see each day which sentiment shifts are in play and which ones are still valid for trading any phase 2 pullbacks. Now, you can also learn about how these setups work and ask any questions that you want during our live analysis webinars each day inside the Forex Source terminal.